Got it. Thank you. Thank you.
All right, I think we're back.
Are we back? Do I have to do that whole spiel again? We had a whole conversation.
We did. You might have to do some of it. I don't know.
Welcome to episode 39 of Beans. I'm Shelley Van, and this is Ryan Grace.
What's up, Shelley?
Hello again. Thank you all for bearing with us. I'm driving the ship, so be afraid. This is Dan's spot. Ryan's in my spot. So thank you all for your patience because we got a lady at the wheel. Which I don't usually say. I'm a damn good driver.
Yeah, wow, you went there.
I know, I went there. Well, I was like, everybody's thinking it.
I wasn't. No, I was just thinking, it's Friday. Everyone was partying last night, I'm sure. That's what you do on Thursdays, right? And yeah, it's just a little slow, so things weren't working.
Yeah. I
didn't think it was because of your gender, but hey, now that you've said it, yeah, normally Dan runs it. He's a man, and that's why it normally works. Yeah.
Oh, we have so many friends here. Hello,
Who's
Mike,
here?
Fred Arm, Keith is Go. What's up? And I don't know, you see more of the chat than I do, so you're in charge of shout-outs.
What's up, Frank, Metal, Keith, Fred? I think that's all I can see.
Oh, okay.
We got to get more people chatting in here, and then it'll scroll for me. Sammy,
What's
Ben,
going
what's up?
on?
Mac, Yak. This is cool.
Love it.
It's nice to see everybody here.
How is Dan doing? We haven't heard from Dan. He is properly disconnected and honeymooning and hopefully having a wonderful time.
Dan was like, I'm out.
I'm out. Good for him.
Yeah, we think he's coming back. We hope he's coming back.
hope.
Yeah.
Mm-hmm.
But look, I know what it's like to be able to unplug for a second. It feels good.
Oh, yeah.
Yeah, for sure. So we wish him the best. Congrats to Dan. He was just married. Where did he go on his honeymoon?
Canada.
Awesome.
Yeah.
Okay. Cool. Yeah, you know, I think I remember him telling me. Was he going to Montreal?
Yes, I believe
Awesome.
so. Because I think they had another wedding in New York, so it was kind of like, okay, we'll honeymoon here and then go to this wedding, but then they're going to do like another honeymoon 2.0 in Italy or something in the spring.
Good trip. Yeah, double down. I like
Yeah.
that. Montreal's awesome. I don't know if we've got anybody here from Montreal, but shout out to Montreal, I guess.
Where'd you honeymoon?
We went to Italy eventually. Same thing though, like a year later, did a quick kind of weekend thing in Maryland. We went and stayed at the same place where they shot the scene in Wedding Crashers, where they're all at the house in the backyard. So that's actually, I don't know what you would want to call it. I wouldn't call it a resort. I guess you could maybe call it a resort, but in Maryland there, that's where we went. So did that for a couple days, and then eventually, like a year later, went to Italy for the first time, and it was really cool.
Very cool.
Yeah, Italy's awesome.
Love that. Love that, love that. Bali is good.
Never been.
Yes, please. I've never been either, but that is definitely on the bucket list.
Yeah, I've heard good things.
Mm-hmm.
The Instagram pictures look nice.
Uh-huh.
You know.
It's crypto friendly over there, isn't it?
Right.
Or am I
I'm not sure.
want to say it's Bali.
Feels like it should be.
Super
right?
crypto friendly. Yeah.
Yeah.
Well, speaking of crypto and all things TradFi, DeFi, we've got the LP master in the house and TradFi big brain. So I have made a commitment to learn options trading. I am an infant in this world. So whatever we do today, I'm going to be like, wait.
Okay, we'll take it slow.
Yeah. Like break it down for a noob. But I'm very excited to have you here.
I'm excited to be here. We're gonna have a lot of fun. I've been looking forward to this, and as you mentioned, we'll go anywhere. So I appreciate the kind words, but yeah, I've got a little bit of experience in liquidity pools. So if we want to talk about that on the DeFi side of things, I've got a handful of positions on right now. Shelley, we could talk about options and IBIT, ETH, so stick with crypto, but get more into some of the more complex derivative structures.
Okay.
You might find there's some interesting trades that you can put on. I'm sure you'll be interested. And you know, at the same time, I bought some natural gas this morning too. So.
We have a button for that.
Uh-oh.
Yep, have to. Okay, well, we've got a lot to do.
Yeah, so we can go wherever.
Before we get started, I'm going to go ahead and share your screen. Can you open the tweet that we want people to get some attention on? Let's
Absolutely.
see. We've got a pinned tweet and the tweet below it that is for this episode. go retweet both of those, tag some friends, you know what to do, and we'll run some giveaways at the end of the show. So that first tweet thread that's pinned, and then the live feed for this Beans episode. Both of those we'll run giveaways on. So 2 chances, get in there. Again, you know what to do. But yeah, this newsletter power list, Ryan, you want to just scroll through it really quickly? And I think this is the first time you've seen it.
Yeah, let's take a look and see who's on the list. I'm hoping we made it next to orange. I'm hoping.
You're hoping. Oh, I lost my mouse. Here we go.
Here we are. Number 1, next to orange. So we're taking a look at the a lot of the newsletters that I'm sure many people have heard of. I think are all very valuable. I'm a subscriber to, I'm sure, a handful of these. We'll see what's all on the list here. But the first one that we've got, Shelley, is of course the Tasty Crypto email newsletter next to orange, which goes out every Saturday morning. I think there's a little bit of value in there at times.
So modest.
Yeah, I write it, so maybe I'm a little biased, but I think it's kind of helpful.
We, the Cave, all contribute to the overall newsletter, so there's a lot going on in there.
Yes. It's a good one.
It is a good one.
Let's see what's next. Amber Data Derivatives, another awesome newsletter. A lot of great trade ideas in there. Obviously, if you watch Tasty Crypto with us, you'll see Greg Magadini on the show from Amber Data and always bringing some great insights. I believe he writes this as well. So yeah, I would subscribe. I do subscribe. I'm a Milk Road subscriber also. So this is a good one. I don't get to read it as much as I'd like. But,
do you know the guy?
So I don't know the guys anymore, but at one point, one of my good friends acquired Milk Road, and I think they've, I don't know where they're at now. I haven't talked to them about it in a while, but was involved in some capacity. So, but don't know the people that started it.
Gotcha.
Know the people that took it over for a period of time
Okay.
are not, I don't think are actively managing it anymore. But they're doing a lot of cool stuff. I think they've got a podcast out there as well. Good newsletter. I read it. My brother sends me things from it, so
Nice.
people like it.
Love that.
DeFi report. I'm not on this. Are you? I got to get on this.
Well, because I built this, I did subscribe, and I think you'll really like this one
Okay.
because it goes deeper into the weeds than I typically go.
Oh, we're getting into Mando Minutes. I have seen this before. This is cool. I think it's like Rect Radio too. Is the podcast? Yeah. Got to get on this list.
I like this one because it's just like headlines, and you can just every morning
Quick summary.
really just kind of peruse and get a general grasp of what's happened and click for more details where you want to. But yeah, very nice.
Cool. And we got a few more here. Lucky Trader, Alpha Pact, and I'm sure there were some that we missed. So
Comment.
link.
Yeah. What are we missing? And then just scroll down a little farther to the next tweet. Oh, sorry. Go back to hit back on next to post, that profile, and then just scroll past our pinned tweet just so people know to retweet our pinned, and then the tweet right below it, which is the link to this show.
Yeah, let's pump the numbers, huh?
We're competing now. There's an internal competition, so you got to help us win.
Yeah, I don't know what the views are for Tasty Live at the moment, but we're gonna try to beat the live stream views there. We'll see if we can do it. Help us out. Retweet the stream.
Yeah. Let's get at least 1,000.
I think we can do it.
We can do it.
Yeah, you guys have put up some decent numbers before. Yeah.
Yeah.
Been in that territory.
Hell yeah. Yeah, we had 10,000.
Yeah,
When we
right.
launched
1,000.
the token.
Come on.
Yeah. And just quick housekeeping update for the TC token. Next week, when Dan has returned, we will be doing a full episode on TC. So, don't worry. Things are brewing.
What you did there.
Beans are brewing. All right. So, from here, where are we going? You want to...
Where do you want to go? I've got some trades to manage. I can talk through those. I mean, that's jumping right into the weeds. We can start with kind of taking a look at what's going on in the market here. I think it's interesting to me at one point. I know we've got, and obviously when you have a 24/7 market, you're going to see different percentage changes depending on what your cutoff is for the daily period. But I have seen, let's just look at the price of Uniswap at 8.15, regardless of the percentage change that we're displaying right now. You look elsewhere, it's up 4 or 5%, depending on the cutoff again. But nice move in Uniswap, which is interesting to me, and you're starting to see this in other areas of the market too. Nice move when you have ETH down. So, okay, there's a sign there, a signal possibly, but some of this stuff is catching a bid. So we can go through the markets. We can obviously put some trades on. We can go anywhere, Shelley. What are you thinking?
I'm thinking
where do the people want us to go?
Yeah, where do the people? You can see chat. I can no longer see chat. So where do the people want us?
A sign there, a signal possibly. Some of this stuff is catching a bid. So we can go through the markets.
Meta Tiger's
we can obviously
here.
put some trades on. We can go anywhere, Shelley. What are you
I just
thinking?
pulled up YouTube, so I'm not seeing X at the moment.
Okay. Where do the people want us to go?
Yeah, where do the people? You can see chat. I can no longer see chat. So where do the people want us?
On X. A sign there, a signal possibly. Some of the stuff is catching this morning, everybody. So we can go through the markets. I got big shoes. We can obviously put some trades on. We can go anywhere, Shelley. What are you thinking?
Pulled up YouTube, so I'm not seeing X at the moment. What are our options?
Where do the people want us to go?
Yeah, where do the people? You can see chat. I can no longer.
Yeah, we can go wherever really.
We can go through some of the indicators that I use. I can talk through my approach. Markets. I got big shoes.
If you have any interest in that,
we can go how we're about trading. I think about order entry. Where do the people want us to process? What else I might look at? We can talk about.
Yeah, we can go wherever really.
Where should we can go through some of the indicators that I use. I can talk through my approach. Markets. I got big shoes.
If you have any interest in that,
we can go how we're
yeah, absolutely. I mean, I can just let's pull up a chart here.
And I guess we're looking at ETH A. So this is the Ethereum ETF, represents ETH or an investment in ETH. We could pull this up on the ETH chart too. But I'll just show you a couple things that I look at more for like FYI. I mean, these are just indicators on my sort of dashboard. But you know what? I've just realized we're gonna have to add them because it doesn't save the settings across different machines, right? So I'm on a different browser than the one I normally use with the tastytrade web app. So that gives us an opportunity,
clean slate,
to kind of add these here in real time. So a few things that I like to look at. And again, this is not something where, oh, if this indicator does this thing, you put on a trade, you buy or you sell, or it's going to make you money. It's more so, I think about this as like a dashboard. So I'm driving a car and the ultimate goal is to get from point A to point B, and to do that safely, I kind of need to know what's my speed. If it's at night, I need to have my headlights turned on. I need some windshield wipers. There's just a lot of things maybe that you want to look at or monitor or think about. I might want to know, what are the weather conditions more so. And so that's kind of how I think about some of these indicators. They're just that, they're indicators. They're not necessarily like trade triggers or anything like that or alerts. But the first thing that I want to look at is just what the kind of, let's say, 3-month moving average is, just to get a sense of the trend. Okay. It can break, of course, but kind of want to know what's the average price been over the last 3 months versus where we are today. Are we below it? Are we above it? Are we kind of right there in somewhat neutral territory? You can use this in some way to get a sense of course, whether we're in a kind of trending bullish or bearish market. So this is just a simple moving average. You can use an exponential moving average. It's going to put a little bit more weight on more recent prices. But SMA, and you'll see simple moving average here. And you can pull this over on the screen, and then you can set the length. So I mentioned 3 months, roughly 90 days. You look at 9 days. You could look at, 12 weeks. You can kind of slice and dice however you want. I'm going to look at 90 days.
So this is in days.
It will be relative to whatever time frame we're looking at on the chart, whatever bars we're using. So if it's a daily, then it'll be days. If it's weekly, it'll be 90 weeks. But for this indicator in particular, I'm going to look at that daily period, over the last 90 days.
Gotcha.
And as you can see, that's popped up here. So again, this just kind of gives me a sense of the trend. Pretty bullish trend here in Ethereum. Where would I be concerned if we started to break down underneath that line or that average? Now you're going to see these things at times converge over time, where the price is going to come down to the average. But if you start to see a pretty quick breakdown of that, and you can look at volume as well, which we have on the chart, and you can see, is there a lot of trading activity? Is there a lot of volume behind that move? And if there is, that's just another signal. Okay, yeah, this might be a bigger move or the start of a bigger move. Just something to keep an eye on. But right now, bullish trend. We look at ETH A.
So now this is this purple line.
Yep. So that's just our simple moving average.
Okay.
Straightforward, 90 days. You can, again, configure it however you like. But I'm looking at 3 months.
Okay.
I think 3 months is kind of a decent, not extremely short term, but gives me a good view of kind of the trend in there. You could look at 1 month. You could do a 30-day as well on here, and you kind of see, over time, if we're looking at 30 days versus 90 days, or we're looking at 50 days versus 250 days, how are those averages moving? What's happening short term versus the long-term trend, and vice versa. And this is helpful for just kind of being aware of that.
Love that.
So I will add on the simple moving average. And then the next thing that I'd like to get a sense of is kind of realized volatility in actual price terms. So we can look at this as a percentage annualized, and we can talk about that in a second. But another way that we can look at this is through something called an average true range. It's the average range of the price on a daily basis over a certain period of time. Maybe we look at the last 3 weeks, we look at the last month. And so that shows you that on average, ETH's been moving $200 a day. And if you're starting to think through your trades, or more so when I put on option positions, or I want to look at what those options imply versus what the underlying stock, ETF, crypto is actually doing, it's going to give you some insight. It's helpful to know, I think, what the price of the thing you're trading has done in the last month, in the last 3 months.
Sure.
So this indicator is going to be ATR, or average true range. And the same thing here, you're going to be able to configure this for your period that you want to look at. So maybe you want to overweight kind of the shorter term time frame, and you want to look at the last 2 weeks. I think that's fair. A lot of people probably look between 14 and 21. You kind of shift between those two periods.
Okay.
21 might smooth out a little bit more of your short-term volatility, realized volatility in a sense, of course, because it's going to give you a 21-day period. But you want to look at a shorter term period and really encompass a lot of what's happened in the last 2 weeks. You could go 14. But let's just look at a 21. So we'll add this here. And we've got this at the bottom now. So what is this telling me? ETH A, last price, about $32.75. On average, over the last, if we calculate it based on a 21-day period, you can see going back all the way throughout the time frame of the chart, we can see what that was at certain points in time. But over the last 21 days, we've been moving on average about $1.38 a day.
Interesting.
So then you can look at what is $1.38 as a percentage of the underlying price. You get a sense of, okay, ETH A or ETH is moving 2, 3, 5% every day. Be prepared for a 5% move. Or if you're looking to buy a dip, look at dips potentially being in the area of 5%. If you want to sell on the upside, now you have a sense of what this thing actually does, right? It doesn't go up $20 a day.
Sure.
It's a $32, $33 ETF, but it does move around by like $1.50, $2 a day. It gives you kind of a sense of, at least that's what it's been doing. Future might look different. We're looking at something here that on average, $1.38, but it's down 4 cents at the moment, right? So it's an average, of course,
Sure.
but that's helpful.
Okay. I like that.
The next thing I want to look at here, Shelley, is also realized volatility, historical volatility over a 30-day period. We can take that and we can look at that on an annual basis, which gives you a sense of, at least historically, how much in percentage terms, given how much it has been trading, we might expect this to change on a 1-year basis. So let me add that here as well. And that's just going to be historical volatility. If you type in volatility, you'll get a few different indicators here. We're going to use this one, historical volatility. And again, want to configure this for a time period. I want to look at 1 month volatility annualized. So I'm going to look at 30 days for the most part. Some people will use 20, between 20 and 30. We'll use 30 here. Basis is annualized. And so you could see here, we need to move the decimal place, but 0.53. On an annual basis, given what it's done, if we annualize this, given what it's done recently or how it's trading over the last 30 days, you have a realized volatility of 53%. So that we would expect, 2/3 of the time, within one standard deviation, the price of ETH, it has been, in realized terms, has been moving on an annualized basis 53%. So from here, it maybe goes up 53%, or it wouldn't be out of the question. Obviously, it's trading as if it could do that over a period of time, or it could go down 53%. That's just what it is in terms of our volatility. Now, you could look at that against a longer term average of volatility, right? We need to put context around these numbers. That's always important. So what is 53%? Is it high or low? Well, the chart kind of helps you. You know, at one point, if you look at this, and again, it's on a rolling basis, but we know that ETH vol can trade at 80%. So if you ask me how volatile is Ethereum right now, I would say it's 53%, which is relatively low to where it's been in the past. If it really starts to pick up, and I would assume, at least historically, given how it's traded, that you see these increases in vol on the upside. Well, let's say this thing really starts to run, you would likely expect to see vol picking up as well. That might be another indicator, at least something to pay attention to. If you were asked, well, where could it possibly go? Well, previously it's been up towards like 80%, which then again indicates that the way that this is trading, if you think about this in risk terms, it could go down 80% from here, it could go up 80% from here. But the way that crypto trades, you know, you see those volatility explosions on the big up moves. We've had the big drawdowns in the past, but most of the time, I mean, if you just consider over 100% volatility, you can only go to zero. The 120% volatility really, to me, is very bullish in that sense.
Hell yeah.
So a couple indicators wanted to share here that I use, again, just to get a sense of kind of how fast we're going, what is the weather conditions outside. We're trying to get from point A to point B safely.
Okay.
You know, and by safely here, I just mean, you know, the goal is to not really lose money. If you've been in this long enough, hopefully you've been able to compound, you know, throughout some cycles. You take some profits when you're at some of these elevated prices. Gives you a little bit of capital to put back to work when you get the dips. So you want to trade around it. But I think the big thing is just making sure you don't suffer through some of these downside moves that we've seen at times. And this helps with some of that, I think. If you take action when you see things change, right? You got to control the human
Get
emotion.
off the roller coaster when it gets really, really scary.
Yeah, it's tough to do that though.
I know. You know I know.
Yeah. Well, you got some indicators here that might help to, you know, if you go through it and you think about it as like a checklist. All right, check, 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 check. Like 7 of the warning signs are flashing, just get out. Or they're all green, like load the boat. Right? It works both ways.
Love that. Love that, love that. Donna says average true range is a favorite indicator. So we've got some tasty traders in the house.
Awesome.
Anybody else using charts for their trading strategies? And I only see YouTube now, so what do we have going on over on?
A lot of YouTube comments. I haven't seen too much come through. Keymasters joining us from X, but yeah, the most of the comments here are on the live stream on YouTube.
Okay.
How many people are on that stream right now? You got to pump it.
I can't see it from where I'm at right now, but one more reminder, Ryan, if you want to click over to the tweet.
14. We got to jump that.
We do have to jump this.
15. It's going up as we speak.
Yeah. Click over to the tweet or your Twitter tab just to remind people. We got 139 views on the X stream. Yeah. Come on, everybody. Retweet, like, tag friends. Let's get that going. Retweet our pinned. We've got 2 giveaways running that will pull winners at the end of the show. So get on it.
We're going to get to 20 on YouTube. I can feel it. Yeah.
There we go. Yeah, share the YouTube video. Let's get some new friends in here. So anyway, didn't mean to interrupt you. Just wanted to remind everybody.
No, you're not interrupting me.
Get on the giveaway.
It's your show.
All right, back to charts. Gary does not use charts. Interesting.
Hey, that's all right. They're not for everybody. I mean, I, again, just like to use these indicators to get some sense of kind of what's happened in the past. It's not necessarily predictive of the future, but, you know, for something like Bitcoin or ETH or a lot of these meme coins, you don't have options markets for the most part. I mean, you do in some of these ETFs, you do in, well, some of the tokens, but not in everything. And certainly for U.S. investors, it's a bit less accessible. So there's just not a ton of participation in the market anyways. But, in a world where if you're trading options, you might not even care about a chart. You might just look at things in vol terms and, you probably want some understanding of where it's been historically, which I think is helpful to chart too. But, you might look at this more mathematically, more quantitatively. I think there's clearly that approach. We talk about it on Tasty Live all the time. But with something like crypto, it trends and everything's kind of positively correlated in terms of tokens and the relationship with one another. It's just some are more volatile than others. Sure. And so for me, again, I think the chart's helpful because it's like I need to stay on the right side of the trend. And when that trend breaks, like you can't really short this. You can use some futures, but if you're in the spot market, it's long only, right? And all you can really do then when it starts to break down is either you get out or you're holding your bag and you're just hoping that you get a bounce. But I think the preferred approach for me at times is just to take a little bit off the table and to get out when that breaks down because there's not really much else you could do. But I hear you, Gary.
Thank you, Donna. I think, if there's a 5% swing, let's just say a day, and you've got a decent sized bag in there, if you can time that and even get a 3% profit in a day,
absolutely,
that's huge.
Massive.
That's like amazing.
If you can do 3% a day, you are the best.
So yeah, I want to learn the charts and then just go for like 1-2%.
Yeah.
Even if it's not in a day, maybe every couple of days.
Even a week is fantastic, right?
Yeah.
To put context around it, rates are a bit higher now, but everybody knows that your checking account doesn't pay you anything. In some cases, there's a high yield savings account, but those rates have come down to like 3%.
And especially with something like
a year, not a day.
Right, you're getting fractions of a penny. Yeah, no, I love that. All right, so what do you have to do here? You said you're managing a position.
Yeah, I've got a couple things that I got to take off or make a decision around, and through that process, more than happy to walk you through any questions you have or anything that anybody in the chat wants to discuss. But like I said, Shelley, I have a few positions that I've been trading recently. ETH here, this one's down a bit, starting to build a more sizable position in there and trying to do that through selling cash secured puts. And what that allows you to do is basically, for anybody that's not familiar and isn't from the Tasty Live audience, that allows you to set up a trade where you're going to generate some yield. And if the price does not go down of Ethereum in this case, or ETH, then you just keep that premium that you sold the option for, that yield that you generated. You might not make as much as if you just owned Ethereum and it went up, but you're selling a cash secured put, you're taking in some money for doing that. And in the process, you're basically entering into an agreement where you can trade out of the position, of course, but just generally speaking, when you're writing an option, you are going to take the other side of that position in the event that the option pays off. So the option is insurance, selling insurance. You're giving somebody else the ability to sell their Ethereum at a set price. In this case, you're doing it at a price that's below the current price of Ethereum. So for someone that's buying that option, they're just using that as insurance. Sure. Maybe they're willing to take a little bit of a loss. Okay, it swings around by 5, but I want to protect myself from a 20% drawdown. You, on the other side, are saying, I'd like to buy some ETH 20% lower than where it is right here. I'm super bullish. I'm Shelley Van. This is what I do. And so you can take the other side of that. And now, if the insurance contract doesn't pay off, you don't end up buying the Ethereum at that 20% lower price than where it was when you put this position on. But what you do end up with is the premium that you sold the option for initially. Gotcha. So you generate this yield to wait, right? I'm waiting. Like I don't know what ETH's going to do. Nobody does. Well, I think it's going to go up, but that's just my opinion. In the meantime, if it goes down, yeah, I would love to buy it 20% lower. If it doesn't, at least I can make a little bit of money, like putting on that trade.
Yeah.
So that's like a really long-winded example and answer around a cash secured put.
Is there a name for this strategy?
I would just call it, selling a put, selling a cash secured put. So I've been doing that in ETH and trying to add to a position here, trying to build a more sizable position for the move that I think is coming. We'll see. But yeah, I've got a couple trades on in here. So if we just take a look at this, I'll show you a couple things that might be interesting to you. And if you have questions, like send me in whatever direction. But let's go over to the trade page. And you can see here on our options chain that we've got some positions with 0 days until expiration, meaning they expire at 3 p.m. Central Time here. Got some stuff in the next week, 7 days out, 14 days out, and in the next 42 days out in November. These are your monthly options, just means that they expire on the third Friday of every month. And then there's also weekly options. Everything expires on Friday, though.
Okay.
At one point, there weren't weekly options. That's what makes weekly options relevant. These always just expired on a monthly basis, long time ago. But now there's weeklies, and in some cases, not in this product, but in others, there's dailies.
Okay.
So you can have a lot of fun in the options market
Yeah.
all the time, as long as it's open. Unlike crypto.
Right.
Yeah.
That's what throws me. Like I was playing.
Yeah, if you're
around.
coming from the crypto space.
I was in crypto for so long, and then I came back, and I was like, wait, what? The market's closed? Oh, that's stupid. So yeah, I got really spoiled in crypto. But all right.
I think we get there though eventually. I mean, you're starting to see it more with 24/5 equities. You've got futures that trade 24/5. Always have sort of thing. But I think you eventually get there with everything.
So yeah, do your thing.
Yeah, so just got a couple things I want to clean up here. Just take a look at so that you understand here. This is a 2-by-1 ratio spread. So this is a position where it's a little bit different than what I just described to you, but has some of the same elements. I have bought 5 of the 32 puts, and I've sold 10 of the 31.5s against them. Because you're selling more than you're buying, take in a credit. So you have this trade on, just like when you sell the put, because I'm selling more puts here at a lower strike than the ones that I'm buying, I'm going to generate some premium. It's not as much as if I just came in here and I sold 10 of a single option, because I'm offsetting some of that credit with the debit that I pay to buy the other 5. But you still do this for a credit. You still generate a little bit of yield. The reason why you might do this, or what's interesting about this, without getting into kind of the technicals around, the implied volatilities on a per strike basis, we can, but without getting into all of those details, what's interesting about this is that in this trade, the same one, whereas before we want to buy ETH or ETH-A at a lower price, if it goes down and I can buy it at 31.5, I have this other little kicker in terms of the long put spread, the 5x5 that's inside of this that I own. So that would be fully profitable at, in this case, 50 cents a spread, which then would offset even more, that profit would offset even more of the costs that I would pay for the other 5 short puts that are inside of this spread that I would use to buy 500 shares of ETH-A with. Or I wouldn't use it, but it would be the result of, if we took that into expiration, I get assigned the shares. I have 5 contracts. Each contract represents 100 shares. So I would be long 500 shares of ETH-A at $31.50. But offsetting that cost are 2 kind of yield generating components. One is the small credit I receive to put that trade on, and the other is the value of the 5 contract put spread that sits inside of that. Depending on how wide this ratio spread is, it's only 50 cents. But if it was $5, each spread is worth $5 or $500 because of the multiplier.
Right.
So that offsets a little bit. It's like if you could time it perfectly and at the right strike, that's kind of how it would work. But you would get into the position where I'm long at the 31.5 level where I want to be. But if none of that happens, you still did the whole thing for a small credit. So you maybe brought in $100 in one scenario, right? There's these kind of different outcomes that can occur. That's what's really interesting about options trading. Because again, you can put these structures on that will allow you to get into a long-term crypto investment, but do it in a pretty beneficial way. Because the goal is always to just reduce your cost basis, right? Even in a trade where I get long, it's up X%, I can take off half, now I got a free trade. As long as I still believe it's gonna keep going, I manage my risk through the profit taking. I manage some of my risk in this case through generating the income via this structure, this strategy.
Okay.
but I'm still like super bullish long crypto
Yeah.
or Ethereum in this case.
All right.
So I'm buying shares of the ETF through this process.
Okay.
And on the other side, at times I am, and you can see this is in the money by about 27 cents, but I am selling calls against that position to further, now I'm limiting my upside, of course, but I'm further generating income off of selling those calls, further reducing the cost basis of my position. In theory, you could have an investment where the price really didn't change, and it happens at times over a 1 year period. Maybe there was a lot of volatility in between, but if the price in general didn't really change and you were selling a call option far away from it every single month over that 1 year period, it's possible that you could have brought in enough premium that reduced the purchase price or the cost of your thing that still hasn't changed much in price by 30, 40, 50%. Kind of depends on a couple different factors, but that's possible. And so that's, again, another strategy where I've got this thing, I have a position. What else can I do with it? How can I generate yield off of it? If I'm entering into some of these positions, these structures or trades, what are the trade-offs? Well, in the case of selling a covered call, the trade-off is that you're giving somebody else the ability to buy it at that price, at that strike. So you'd sell out of the position. Kind of like selling a coupon almost. Right? So why would I as a trader want to buy a coupon? Well, maybe that's how I want to just deploy some leverage. Maybe I'm super bullish on the thing, right? There's additional reasons. Maybe I just think the coupon itself is cheap, right? The coupon's trading at 25 cents, it's going to go to 50. I don't really care what the underlying price does. So there's a whole nother dynamic there. But you are selling a coupon that basically lets you sell your ETH shares to somebody else at a higher price. You're getting paid to sell your stuff at a higher price. The trade-off is that you're limiting your upside. In a world where I shave my beard and ETH is at 10K, because that's what's going on here, then you might have missed a good portion of that move, the monster move. Don't miss the monsters. So there's an art and a science to all of this. There are always trade-offs, but that's how you can generate income against your position, by selling call options.
Okay.
So that's like a whole kind of crash course in crazy places, but that's what I've been doing. So you have context.
Yeah. Thank you. And I apologize to the chat. You just got to see my thinking face for the last 20 minutes because I'm like,
it's all good.
I'm soaking it in. But so, all right, let's show the people what you're going to do.
Oh, the only thing I'm really going to do here is probably just roll this 32.5 call out. So what that involves is I am buying it back at some price in between the bid and the ask. Maybe we get 20 something inside here. I'm going to buy it back at a certain price, and I'm going to sell another one in the next expiration. I'm going to sell something that is more expensive than what I'm buying in most cases. If that's not the case, then no problem. This is against 100 shares. If I didn't do anything with this, there's two outcomes here. At 3 p.m. Central Time, the market's going to close. And depending on where the underlying price of ETH A is versus $32.50, one of two things is going to happen if I don't do anything. If the price of ETH A at that time is above $32.50, then what it's going to result in is that option, that 32.5 option there, is going to be exercised automatically. And that's going to result in the sale of 100 shares of my ETH A ETF at $32.50. Now, I bought those shares at a lower price than that.
Got it.
And I sold that call option for a certain amount. We can probably find it if we look at the activity here. So I sold that call option 32.5 for 58 cents. Regardless, right now, today, if I buy it back at, say, 38 cents, I make $20. Not a lot, but it's a profitable trade on its own. I can keep it, take it into expiration, and if the price is above it, 32.5, it sells out of my 100 shares. So I don't know what I end up making, but I keep the credit that I sold this for initially, and I sell out of the shares at a slightly higher price than where I initially bought them. I sell out of them out of the shares at $32.50. So that's one outcome. The other outcome is that the price of ETH is below $32.50. And if the price of ETH is below $32.50, that option's worthless, because that option gives you the ability to buy ETH at $32.50.
Right.
It's a coupon. Well, the coupon's only valuable if the actual price in the market is higher.
Yeah.
And so if I can buy it for $32 in the market, and I have this thing at one point in time that lets you buy it for $32.50, when that thing hits expiration, if the price in the market is lower than what the thing lets you do, the thing is worthless. The coupon is of no value. So if I sold this call option, I just keep the whole 58 cents or whatever it is that I initially did it for. The other thing is that because I have the shares, it just automatically sells out of them, so I don't really care about that as much. But I want to look at how much extrinsic value or premium is left in here, and then what can I roll this for? Like, what's the new amount of money that I would take in after buying this back at a certain price and then selling out of it. And you can see this spread is kind of wide too. 24 cents, 25 cents a quarter in here is it was a lot to have to work with versus if it was just 1 or 2 pennies wide. So these aren't super liquid on a more weekly basis. You'll see more activity, tighter spreads, more liquidity in monthly options for ETH. But let's see what we can do with this here.
Okay.
So a couple ways that I can do this. I can go in and set it all up manually. But first, what I want to do is just look at the extrinsic value that might be left in here, and that's just EXT. So there's 17 cents. What that means is that is the additional premium or additional value in the price versus wherever the stock or ETF is right now and what that strike price is. So the stock is at 32.74, the strike price is 32.50, but depending on what the price of the underlying option is, and I believe that this is just using the midpoint in between 30 and 54, that value is more than the difference that currently exists, right? If it is worth $32.77 in the market, and I have the ability to buy it for $32.50 at that point in time can only be worth the difference between where I could then sell it at and what I bought it for at that lower price. But it's more than that right now. It's 14 cents more, the option is, because it still has some time premium. Even though it expires today, it's not until the end of the day. Crazy shit can happen.
That's true.
But there's not that much premium in there.
Right.
Anyways, that's an explanation of extrinsic value. And what we're seeing here, why there's 14 cents in there. If we hold this at the very end of the day, I'd realize that extrinsic value. If I closed all of this out right now, be giving up additional $14.
Okay.
So you can do it from the option chain. It's also very easy just to open up your positions, find the position here, which is the 32.5 call. You can see that it's in the money. What that means is the ETF price or the stock price is above the strike of the call. We know just by looking at this red ITM, we know that the price of ETH is higher than 32.50 because this is the 32.50 call. We don't know what it is, but when we look at the top, it's 32.75, but that's what this is telling us. It's red because it expires today. These other ones are not red because they expire next week, but they're still also in the money. And these are on the put side. We can talk about that too. But I can choose a couple different things here. I can do a quick roll. I can roll to different expirations. When I look at this is going to tell me, this is super helpful when you're rolling options. It's one of the great features of the Tasty Trade platform, by the way. If you're an options trader and you're not on Tasty Trade, at least check it out because some of the tools in there, especially for options traders, are just amazing. This is going to show me though what amount of money or credit I'm going to bring in for the roll across different time frames. So I can roll it out another week. I'm going to take in 83 cents or $83 because I just have one. I can roll it out for 2 weeks and I'll take in $1.44. This option is right at the money. And so what this is also pricing in is, in some ways, right, there's a little bit of time premium in here, but in some ways it's giving you a sense of what the market's pricing in for that time period too, in terms of the move, right? Doesn't mean that's what's going to happen, but it reflects kind of the current values of the options. Anyways, maybe we just look to roll this out to the next 7 days as an example. Like I mentioned, it's a bit illiquid, so we're going to have a very wide spread in here. It shows me 83 cents, But that's just because it's the mid price. It does not mean that I'll get filled. There's no guarantee that I'll get filled at the mid price. Might have to work an order in here. I know for a fact I can sell it for 66 cents. I'd love to sell it for 86 cents.
Sure.
Or $1. But I know that I can sell it for 66 cents. We can try to sell it for 83. What we might do is just try to come in here a little bit higher. We'll walk it down a little bit and then let the order kind of rest here. We'll see what happens. But I can come in here and just, first of all, I'm not going to get filled, but just as an example, put this in at 95 cents. So mid price is 83. I want to sell it for 95. That roll would bring an additional $95 in premium or in yield.
Money made.
And so the mid price is obviously what we just saw on the screen, 83 cents. It's a working order now, so we'll use this filter just to go between our working orders that are active and the orders that we were previously filled on. So we're just gonna look at that working order. It's 83 mid, I put it in at 95. Let's replace the order here, and you can quickly do that. Let's just drop this down to 90. Still not gonna get filled here. I don't think we'll get filled at 83, we'll see. But yeah, no fill. You did see the mid price come up a little bit. The bid on the other side adjusted slightly as we brought the offer in. So if we go back to the activity, you can see we moved from 83 to 85 cents. So I got an idea that maybe we'll get filled somewhere around here. Let's see. So we'll move this back down and just come in at that mid, and it might readjust down. So we'll see.
Wow. Okay.
We got filled at 85. So a little bit better even than the 83 that we would have done.
Interesting what you just did there.
Yeah, so this is, you can just fire off market orders, but like in this game with size, a couple pennies here or there does help a little bit. I'm not going to say it's going to make all the difference, but you try to find some edge, and that's not the best example of it, but that's more so just like,
sure,
this is how you work a little bit of an order, right? At some point in time, could you maybe eventually have done this better, or could it go up in value? Did I sell it cheap? Like, who knows? But versus the 83 that we saw at mid, we got 85 as we kind of tried to find out where the market was a little bit. And that doesn't mean that we could have done that on like thousands of contracts
all day.
But like, we kind of work an order in there. We just sold that for 85 cents. It's 85. I can look at the extrinsic on some of these. So, here's our new position. So we've got $1.06 in extrinsic that's in this option price right now. 32.50 is the strike, 32.72, but you can see the option's trading for about $1.25.
Interesting.
Right, and that again is just that we know
what almost up.
Oh, we can keep going for a little bit longer.
We can?
Yeah, of course, yeah. Go until like I have to go to the bathroom or whatever. I don't think I have any meetings. I gotta write the email. I gotta write the Tasty Crypto. Well,
next to Orange.
Yeah, and I didn't mean to say I write the whole email. Actually, Shelley puts the whole email together. I just write once in a while the article that goes up on the site.
Just the article, the whole meat of it. Yeah.
But I've gotta write that. Otherwise, we can do a couple more trades. We can talk about some of the other things going on.
What's going on in chat? We should run one of the giveaways.
Yeah, let's do them both. You got to just direct me over here. I know I'm not doing the best job of like.
It's okay. It's okay. First time.
Running the show.
And you're doing a great job.
No, thank you.
What's going on in chat? We've got Mike saying pro. Yes, he is the pro.
Thanks, Mike.
He's learning, and maybe we need more classes in the future. Love that. I want to do some pre-recorded stuff too.
Yeah, we need to.
Like really. Break it down, because we can absolutely use some courses. So if you will kindly go to Twitter and let's look at that pinned tweet. We've got, can you refresh? I just want to make sure those are all current. And let's see.
One moment, please.
We've got, scroll down, 22 retweets on the pinned. And
beautiful.
Then scroll down a little more. I can only see 31 on the live show. So let's pull the live show giveaway. So all I need you to do, scroll up a smidge on that 57 minutes. Just right click and copy that link. I don't know if, no, that didn't work.
Oh, I didn't click the right thing.
Oh, okay. Well, if you clicked on it, just go to the URL and copy and paste it. No, up in the top.
Oh no. First time with my new hands.
And this is a PC. You're coming from a Mac, so
Yeah,
the
the
keyboard's
whole thing
different.
is like,
it's all.
oh my God.
Yeah, so just
I'm lost over here.
copy and paste the
First
URL.
time on X. Sorry.
So yeah, just copy that URL.
Put it in a new tab.
No.
Oh.
Do you have it copied?
Yeah.
Okay. I think I have XPicker open.
Yes.
So click over to XPicker, drop that URL in there. All right. Now select retweet. Scroll down. We'll do 2 winners. We might do some more. So look alive, everybody.
Hell yeah.
Must follow. Type in tastycrypto. I don't think you need the app.
Oh, okay. Like I said, I haven't done this in a while.
That's okay. Now
I got to start tweeting more. It's still called tweeting, right?
I mean, we still call it tweeting, but
Yeah.
hit enter after Tastycrypto. Okay. Scroll down a little more. We're going to tweak a couple of these at the bottom. Scroll. Under minimum followers, just knock that down to 50. Some of our friends haven't built their Twitter accounts
Hey,
as much.
if you're like me and you're not that active on here, maybe you're increasing your activity, you got to start somewhere.
You do, and we want to not count anybody out, but we're not trying to reward bots either. So,
Of course. No bots.
No bots. Minimum tweet count, can you drop that down to 52? 50 also. There we go. All right, now go back up. And pick a winner.
Oh, this is exciting. Here we go.
What are we even giving away? I forgot.
Yeah, I guess we got to talk about that first
Yeah,
before
yeah.
we pick a winner. What are you going to, what did you win? Here's a hot dog, which wouldn't be a bad prize.
I miss hot dogs.
Yeah.
I'm gluten free.
Okay.
So
Yeah.
the buns just aren't.
They're not.
They're
No,
not
they're.
worth it.
You just eat something else.
We'll do $5 in USDC plus something random, a surprise bag.
Okay.
Yep.
Surprise.
So,
All right, $5 USDC and a surprise coming your way.
Let's see. It'll be like me and you. We'll have to re-roll.
Yeah.
Because we probably retweeted.
You rigged it, didn't you?
Everybody's always accusing. Rigged. Wow, this is taking an eternity to pick 2 winners. All right, we got Mac and JB. So,
Boom.
I think, if I'm correct, that's Mac Yank from YouTube.
Awesome.
And then JB10_12. Can you go back to the tweet and just like view post engagements? Go to reposts. And let's JB.
There's Mac. What's up, Mac?
There he is.
JB, crypto to the moon. What's
All
going
right.
on?
Let me write these down because since I'm not on that computer. What was JB's handle?
JB is JB10_12.
_12. And then what was Mac?
We got Mac at Mac. Get ready for it. 59449091.
91. All right. If I don't have your wallet addresses on file, please hop in our Discord or I will DM you on X and we'll get you sorted. But
Sweet.
congratulations to those winners. What shall we do next? If we've got a little extra time.
Yeah. You can see here we've got some short puts as well. So that strategy that I talked about at the very beginning, these are all in the money. So they don't expire today. They expire in 7 days. But if they expire today, we would be buying a handful of shares here, 200, 200, 100, 100 of ETH at these various prices.
Now, sorry. What can you do with them even though they're not expiring today? Is there anything you can do?
Yes, there are things that I can do, probably not anything that I'm going to do necessarily, but one thing that I could do is also roll these options so that I can collect some more of that time premium that still does exist in these, though it's not very much. You can see there's 20 cents here, 60 cents here. Now, if I rolled these out to November, for example, let me just double check what those strikes were again. We'll just use the 34.5 as an example. So 25 cents in time value premium here versus what the option is or allows to be done with the underlying stock. 25 cents there for the 34.5, or the 34 has 45 cents 7 days out. If we look at, and there might not be half strikes here, but if we look at the 34, then this one has $2.37 of premium. So I could roll this out. I could collect that additional premium in the next 7 days, regardless of where the stock price is.
These are all multiplied by 100.
That's right.
Okay.
Yep. Yeah. So starting to build a larger position in here. We'll see. Selling calls against it again to just continuously reduce that position, or the cost basis, excuse me. But that's what I could do. I'm just gonna kind of sit here. You look at the move in ETH recently from those highs, or all-time high. Really, we're off about 10-ish%. Kind of moving a little bit lower here today, right? We saw that this was flat for a second. Now we're down about 2%. We know via the ATR how much it's kind of been moving on an average daily basis. So I'm not going to really do anything. I think you're kind of at a level where, again, I want to or don't mind owning, and I get that it's at a slightly higher price than we are here. Like, I'll mind if we just continue to bottom or go lower in ETH. But I think you're kind of at a level where, like, look, I'd be buying some ETH probably closer to 4. At some of these prices, maybe closer to 30 on ETH A, maybe a little bit under 4,000. Like, I think it's going to go a bit higher, and so I don't mind. I own it at various prices. It's almost a way to dollar cost average in too.
Interesting. Okay.
So I'm going to hold on to them, and then if you get the bounce, right, they also then all come back in your favor. You could get to a point where, let's say, in the next 7 days, ETH does bounce, and it gets back above 34.5, gets back up here towards 35. If in 7 days at expiration it was at 35, or it was just above 34.50, these would all be worthless. And so I would just keep all of the premium that I sold them for initially. So when you're selling these, let's just say you came in here and you wanted to sell something, pretend we don't have anything on here, and you say, look, if in the next 42 days ETH is lower and ETH A is at $27, which would imply a sub $4,000 ETH price for sure. If you're willing to buy it at that level, you might come in and you might sell this 28 or 27. We'll use the 27 as an example, and we'll just put the price at $1. This represents 100 shares, or that's the contract multiplier. But you're selling one option. You have to multiply this $1 by 100. It's $1 per share. So it's $100. Now, if I sell 10 options, I'd be buying 2,700 shares, or excuse me, 1,000 shares, at $27. I'd be buying 1,000 shares of the stock. So you need the capital to do that, or at least the margin to be able to do it, to put the trade on to start with. But if I did this 10 times, I'm bringing in a profit, max profit of $1,000. That's my credit. The most I can lose is if ETH A or Ethereum goes to 0. So that's 26,000, because I'm buying $27,000 worth of stock in this environment, or in this situation, but I'm receiving $1,000 in premium that offsets the price by $1,000. So my maximum theoretical loss is $26,000. Now, with 1,000 shares of stock, if I buy it at a cost basis of 26, it goes to 25, I'm down 1,000, so on and so forth. But if it doesn't do that, it goes up, or it just doesn't even go to 27. It could go to $27.10, but not below 27. I'll just keep the $1,000 in the next 42 days. So it's a way to kind of like put your capital to work, obviously.
Yeah.
You would enter into positions. There's certainly risk. We can quantify the risk. The risk here, the maximum risk, is if ETH goes to 0. I mean, that's true of being long anything.
Sure. What if you're confident?
Yeah.
But if it's not
We can
going
also
to
look at, like, well, how much does it move on a monthly basis? What is the probability we might assign? What are the options quantifying? There's a lot of different ways that you can look at this, and you can analyze it to get a pretty good sense of like where there's some edge, whether or not this is a good trade versus a bad trade. What's the risk versus the reward? Like, you can look in all of these things.
So much room for activities.
But at the end of the day, it's a way to generate some income.
Can you click on the phone screen and just scroll up so that ETH is actually on? Not on the phone yet, but you can do it through the desktop. Just drag that up so that we can see some more of the tickers.
Which is interesting to see. You have some areas of the market that are trading higher, while ETH, for sure is down here. I mentioned that earlier. We had Uniswap up with ETH down. ETH's been relatively weak. But it's also interesting to see that you're seeing, you've got a bit of a dispersion here, and you've got some other tokens that are trading higher. Not everything is perfectly correlated today.
And I don't know if I said this on any of the live shows, but I had a weird dream about Polygon, and then woke up.
You bought some?
No. Well, I own some from like ages ago. Because I
Okay.
actually used to use Polygon often when it was like the first and only layer 1. I don't know if that's true, but it was what Decentraland was using
Yeah, one of the first ETH scaling solutions.
Yeah, so I do have a bag of it. It's just sitting there chilling. But so my dream, I was like, what is Polygon even doing? But then I woke up to some news, and I don't remember what the news was, but it was like, interesting. Maybe it's a sleeper.
I think the token's merging, or it's
Matic.
finally going through that process.
Yeah,
Maybe you're
like,
seeing like some of those
finally changing their
disclaimers here and there. It's just embedded in your mind.
Oy.
They got you.
Yeah.
Yeah.
Yep.
Messing with my mind, man.
Now, Matic. The Polygon. Oy, oy, oy. Anyway, let's see. Jose asked a question.
I love questions, yeah.
If IBIT is trading at 69 and BTC is trading at 122, what would the price of IBIT be when BTC is 130?
I don't know. I mean, a couple ways that I suppose you could do it. You could go in and, I don't know what the quick math is, but you could just figure out what the ratio is of those two and then just apply it to the price. You could probably just use some of the indicators, the drawing tools, give you like an info box so you could see what the percentage change would be and just roughly apply that to the, take whatever the current price is of Bitcoin, get your percentage change, right? If we know that, I'll just make the math simple. If we know Bitcoin's 100,000 and, we want to look at a 10% increase, 110. So we know that's 10%. So, okay, if Bitcoin's at 110, what would the what would the IBIT ETF be? Just say, well, what's 10% of the current IBIT price? So just look at it in percentage terms. But you can do a ratio and then just apply that. But I don't know off of the top of my head. But that's.
Were you like that little kid that was just like the math whiz?
No, not at all. Complete opposite.
No?
I didn't really pay attention in school.
Interesting.
Yeah, wasn't like the best student, Shelley.
Right.
My parents are both teachers, so maybe that's partially what it is, right? Like the teacher's kid is bad. I don't know. I wasn't like bad. I just wasn't a very good student. I didn't really pay attention. I didn't really care. I'd probably be a better student if I could go back and do it over again.
Format didn't tickle your brain as a kid.
I've gained some wisdom from when I was like 14 since then,
Wow. Good for you.
Thanks. Thank you.
Apsy, hello. Can we overlay IBIT over BTC?
Yeah, there's a couple. Well, that's a great question. Let's go to the charts here. And while I know how to add a few indicators, it doesn't mean that I'm the chart master by any means. But let me just let me clean some of this stuff up. So I'm going to take off what we put on here and simplify this a little bit. I don't know if I can take the volume off here or not. It might be a different setting. But yeah, what you can do here, which is interesting, I suppose, is let's just pull up BTC USD. So this is spot Bitcoin. And then what we can do is just click on this compare button. So I don't think it's the same on all the platforms. You'll have to check me on this. But I use the web app or the web-based trading platform here, my.tastytrade.com. You just log in if you don't use this. I use the web platform most of the time. So this is what I'm familiar with. I think it's the same in like the desktop. I don't think we have it necessarily yet. Some of this stuff in the mobile app, it's going to get there. But if you're on the web, click on compare, and then you can type in any symbol. So if you want to look at, for example, just overlay IBIT with BTC, which you're probably going to see, almost perfectly correlated at different prices. Slight difference, I'm sure. But if we put this on here, IBIT for IBIT, it's going to add that to the chart. And let me change the color because you can't see it because, well, we're looking at the same thing for the most part. So let's, that's not that much better.
Perfect correlation.
Yeah, which is, I think, what you'd probably expect as well. Because IBIT is an investment in Bitcoin, or the money that goes into it buys Bitcoin. So it's going to reflect the same performance. What you can do too, though, is, you could look at this, and if we took IBIT off for a second, let's say that we want to compare this to ETH. So if we want to look at Bitcoin versus ETH, or Bitcoin versus Solana, for example, we can see the performance, right? The prices are wildly different, so the chart would be very skewed. So we'll look at this when we compare these two things in percentage terms. It's the same thing that we looked at with IBIT. It's just that IBIT looks like the same chart because it is the same chart. But when we're looking at this, over this time period here, going back to, well, let's see what the date is. I don't know if the date's going to pop up. Okay, yeah, July. So we're looking at, we can zoom out a little bit. You change your time frames, but you can see that over whatever that period is, Bitcoin's gone up X percent, or ETH has gone up or down X percent. We'll zoom out a little bit here on the weekly. So going back to basically 2024, they're both up, but clearly Bitcoin has outperformed over those longer time frames. Maybe at some point ETH will, who knows? But this is how you can visualize some of this. So Bitcoin up 225% over this time versus ETH only up 113, 114%. So, ETH has underperformed by roughly, 110% during the time period.
Jose says, Greg mentioned something about the ratio on Tasty Crypto a few weeks ago, but I would look into it. Thanks, Ryan.
Oh, you know what? Before we wrap things up, let's walk through Greg Magadini's trade idea that he presented on the Tasty Crypto Show, which I highly recommend. I guess if I can make recommendations, I recommend.
Which that's not on our channel yet, only because we had an issue with the.
Yeah, we'll get it up there.
That'll be up today.
And that's the Tasty Crypto YouTube channel. Greg has awesome trade ideas. He's a pro trader. He did this. When I say that, it's like he did this professionally. Has started and sold some companies. He comes on the show every couple of weeks, and Greg's awesome, first of all, but always has cool trade ideas. And he walks us through them, and we put them on, and we talk through them at times. We can put that trade on, and you'll see that I have a little bit of it on, small position, but I can walk you through what that is. So Greg talked about on the show, and again, go and watch the episode. But in summary, Greg talked about the fact that when you look at the relative cost of IBIT put options versus IBIT call options at the same strikes, essentially the same deltas, but basically the same direction away from the underlying price. The put options, there's a skew in the pricing. The put options are relatively more expensive than the call options. Right? If we know the stock up or down is going to move X percent, well, the put options are pricing in a larger move through the option premium or implied by the option premium versus the calls. Calls are cheap, puts are rich.
I think I need to see it.
We'll show you in a second.
Okay.
But based on that dynamic, it might have changed. So we talked to Greg on Wednesday. It's Friday. But based on that dynamic, it creates an opportunity to sell those puts, the same thing that we talked about, the cash secured puts, far away from the current price, and buy the calls the same distance away. And you're looking for this risk reversal. You're looking for this premium shift. Or you get the big upside move. So you bought calls that you financed with the sale of the puts. So that was the trade idea.
God, that's okay.
So let's take a look at it, and I can show you how to set this up. It's very simple. It is somewhat margin intensive. You have to have some capital to put this on because you're naked on both sides. But you could, and what that means is that you don't have any option that you've bought. You could buy something and just reduce your buying power. I can show you that too. But this is what it looks like. So we're going to go over to the trade tab, and then we're going to look at the options. And we can see, we've got different implied volatilities for these periods. As you go farther out in time, you should typically see larger implied volatilities because the probability of moving 50% is much higher over a 1 year period than it is in a 1 week period.
Sure.
Doesn't mean that it can't move 50% in a week, but you get what I'm saying. So we could just look at December. We could look at November. I think I have some of these on here, and you can see I've got a bunch of other random stuff. I just own a bunch of calls that are way up there. If they ever hit, it would be like a lottery ticket sort of thing. But let me walk you through how you might set this up, or even if I can just find, I think November will work. That's where I believe the skew was at the time. So what I want to look at here is the delta of the option.
Now we're speaking Greek.
We are speaking Greek. We won't go too far into the woods or the weeds here, but this will help us with our strike selection because we want to do the same deltas.
Okay.
And in doing the same deltas, we're delta neutral at the time.
Okay.
Really reflecting the view more so around the premium that exists, selling the premium in the more expensive put side of the option strategy and buying the premium, paying the premium on the call side. What we ultimately want to happen, best case scenario, would be that the price of IBIT just explodes higher because we got paid to put the trade on and take the risk on the other side with leverage. If it doesn't happen, what we also want to see is some increase in the premium or the value of the call option.
Okay.
Even if we don't get
Call
the big
up, put down.
Yeah, even if we don't get the big, if I bought something for 25 cents, I'd love to see it go to 30 cents, 50 cents, whatever.
Sure.
That happens most of the time with a big move, right?
Mm-hmm.
But it could just get a little bit more expensive, relatively speaking. We'll see. Even a small move in the stock price might cause people to rush into the market and buy calls at higher prices, pushing those the prices of the calls themselves up. Gotcha. More demand, right? So those are a couple of things that we might look for. The third thing would also just be that I sold it for a credit. I took in 15 cents even. Well, if none of this happens, took in a credit, I keep $15 per spread. But how you set that up is where we'll kind of end this at. So I want to look at and at the time, the puts were definitely more expensive. Let me change this. I want to do this. His example was just 25 delta. You could do 25 delta, you could do 30 delta. The point is you want to keep the deltas the same. So on the put side, puts are on the right over here, as you can see, puts. I'm going to sell the 25 delta put for at the 62 strike for, we'll call it almost $1.70. $1.67 is where we could actually get filled immediately if we routed the order. The buying power, the amount of money I have to have in my account to be able to put this put trade on, given the risk, is $2,000 just about. And we're going to sell this for $1.67. The most we can lose, though, is, again, if Bitcoin goes to zero, ETH or IBIT here goes to zero, we lose, against what we brought in, 100 shares at this price, it goes to zero, we lose like $6,000. I mean, if Bitcoin goes to zero.
Sure.
On the other side of this, we are going to buy the 25 delta call. 25 delta call is that coupon. Now, if the price of Bitcoin goes up and it goes above whatever the strike of the 25 delta call is, now we have a thing that represents 100 shares of IBIT. We got paid to buy it, basically, if that makes sense.
Right.
Taking in $1.68 or $168, we want to buy something. The 25. So you can see there's definitely less of a skew than there was the other day. Mm-hmm. So this trade has already likely made a little bit of money, as this is more expensive than I've seen it, or these 25 deltas. 25 delta was different depending on where the stock price was the other day, but these definitely have increased in value. So what I want to click on here is the ask, and I want to buy this. So I'd be buying the 77, and I'd be selling the 62. Selling the 62 for, what do we say, about $1.68, and buying the 77 for $1.50.
Is that true that your max profit is now infinite?
In theory. I mean, in the same way that we have to display the theoretical losses if Bitcoin goes to zero, the theoretical gain it just goes up,
Forever. Right,
I mean,
right.
so that's just how you would display it. Otherwise, you're saying...
You didn't put a ceiling on your profits.
Right, which is the same as if you own crypto in any capacity,
Right, okay,
long futures,
okay.
options, whatever.
Okay.
Spot, yeah.
Yeah.
There's no ceiling here.
Interesting.
This allows us to finance a position through the sale of that put. Take the risk on the downside, which again, if it goes down to, was it 62? Buying Bitcoin at 62. So whatever the implied BTC price is how you could think about it as well. I'm buying IBIT at 62. That's where I'm comfortable getting long. Then I'm good. Getting paid to do that. So that's one scenario or outcome here. The other is that now I have exposure to 100 shares of iBit at 77 per share. That's only valuable if like this just explodes higher. Now it's possible that the option that I bought for $1.50 basically goes up in price too. You know, you make money that way. But we can't quantify exactly what that's going to be. We can't predict the future, of course, but this is going to give you exposure to those outcomes. Regardless, you know, you do this for a credit, so you're going to do this for whatever it was, 18 cents, 15 cents. I don't know why it's not popping up here for me. There we go. I had it minimized. Apologies. So I'm going to do this for 25 cents to put this trade on, right? My buying power is going to be about the same because the risk is on the downside where I sell the put and I take the ETF in the event that it's lower than the put strike. So my risk is my buying power is not going to change much here. But I got that potential upside. I'm taking in a 20-cent credit, 25-cent credit, net of fees. It's about $20. It's not much, but do that 10 times, do that 5 times. Like obviously the nominal values are going to go up. The risk is going to go up too. But on a one lot, this is the trade, and it really benefits from or gives you exposure to upside in BTC over the time period, over the next 42 days into the 3rd week of November.
Right. Okay.
So time and volatility are the two major components to most of these trades.
Yeah. Okay.
But that's the trade that Greg talked about on the Tasty Crypto Show on Wednesday. And this is a risk reversal. This is how it works. You're financing the upside exposure via taking risk on the downside in this structure. Excuse me.
I'm so glad this is recorded because I need to go back and re-listen.
Chop it up and yeah.
No, because I would never be able to repeat or like regurgitate any of what I just learned. It's like swimming in my head, but I want to like rewatch this and like actually take notes because I actually love being a student, like notebooks and actual school supplies. So,
yeah, I think it's good to review the material. The other thing we'll get you into is just putting on some of these trades. And they don't have to be trades where you take a ton of risk, but I think, you know, you buy an option, for example, and you see what's happening in the market and you see what's happening in the option price, and you very quickly start to understand the dynamics at play. You quickly understand what drives options pricing. It's not always the move in the underlying stock price or the stock market. It could be some other factors. You know, primarily it's going to be driven by what we call delta or the change in the stock price. But there's other variables. And when you have the positions on, you get your feet wet, sort of thing. It's a lot quicker, I think, in terms of the learning process.
Oh yeah. No, I
easier
learned
to
so much
just, like,
faster
learn
by
by doing.
doing. Absolutely.
Yeah.
Absolutely. All right. Well, it's almost 10:30. Let's run a few more giveaways to reward those who have stuck with us. Thank you all for being here. You want to flip back over to Twitter and see how, go to the profile. Let's look at those retweets. How are they doing? You might have to refresh.
Oh, whoops, refresh. I'm getting a little bit faster. I'm not quite like full speed yet, but I'm getting a little bit faster.
No worries at all. Still got 22 and 33.
33, nice.
All right.
Thank you all.
Yeah. So let's
Giving like the most detailed like options crash course. Just like spontaneously.
Yeah, no, I love it.
Sorry, you just like put a quarter in me and I'll come back in a couple hours, I guess.
I think you still have that tweet, but go ahead and recopy it. Just
This one right here.
yeah. So if you just go to the 1 hour, like right click on that 1 hour and copy the link, and then go to XPicker and refresh that. It's probably the same. I think it is, but
Just to be safe. Here we
Yep.
go.
all right. Retweet. I think all of our settings are good. We'll do another. Let's jump it up to 3 winners.
Okay. 3 surprises. That's how I think about that.
Yep.
Pick a winner. You ready to go?
Yeah, we'll do another $5 in USDC plus the surprise bag.
All right.
Let's do it.
Surprise bag could be good or not good.
I mean, it's never gonna be bad.
It is Halloween, Shelley.
Trick or
you know.
treat. All right, we got Dave Meyer. I'm just going to write these down from your screen.
Yeah, sounds good.
Dave, Meyer. Very Mean Square. That
I like that.
is a fun handle.
You're getting a surprise bag. Very Mean Square.
Yeah,
Let's
I don't
go.
know that I have any of you guys on file for wallet addresses, so you're going to need to check your DMs. Crypto for Retire is an OG Beans homie, so congrats, Crypto for Retire. All right, very good, very good. We can't just let that other one sit out there, so can you go back to X and copy our pinned tweet link, and we'll run a couple giveaways on that one because 22 people did retweet it. We got to show some love, so copy that 16 hours. You know what you're doing now.
Oh, yeah. We're good. We're good now. That's speed right there.
Look at him go. All right, we'll do...
Same thing? 3?
Yeah, 3.
All right. Here we go.
Lemon Peppo Art, Crypto Cherry, and Crypto Bird. Let's go. Those are really good homies.
Boom.
Like Beans fam.
Everybody's getting a surprise.
Winning stuff. And some cash.
Yes, and some USDC.
Crypto cash. USDC is like the cash of...
Yeah, it was dollars.
Web3.
Yeah.
Not fiat, but...
I mean, I think it's all the same at the end of the day. It will all be the same.
Crypto Cherry 6.
Dollars on chain. Get some money.
Mm-hmm. How are you spending your dollars on chain these days?
I have really only been active in some of the larger market cap tokens on some of these pullbacks. So, I guess in full transparency, I've got some positions on in a variety of different places, some stuff that we don't yet offer through Tasty Trade, but hopefully we'll get there. That said, most of my bag, I suppose, is in Bitcoin.
Okay.
Bitcoin is going to be the largest position for me. Overweight Bitcoin is probably the way to think about it. At least right now, maybe take some off and rotate at some point, but I still think, Bitcoin is probably where I want to be. And for long-term purposes too, there's some stuff that I think like a lot of us in crypto, right or wrong, like we talk about trading around positions, but there's also just some stuff that you probably never sell, like, I don't know. I think I want to own Bitcoin for a 10-year period or investment.
Yeah, no,
I want to
that's
trade and make some money in the short term, but I also just want to kind of store hopefully some value in it, and hopefully it becomes a little bit less volatile as a store of value over time, but like been in it as you have for a pretty long time. And so...
no, see, I learned the hard way. I spent my Bitcoin
Okay.
when it was very low, and it was like...
Yeah, but I mean, hindsight's 2020.
Mm-hmm.
I think, though, we've gone through a few cycles now where you have a bit more certainty or conviction. I wouldn't necessarily say it's like safer from that perspective. I wouldn't want anybody to go into something and take more risk than they can afford to or anything like that. So, I don't think it's like it's something that you put everything into. But I do think today versus the risk that probably was inherent to the early stage kind of adoption cycle, the market structure, I think it's a lot safer when you have, or it'll be less volatile, put it that way, when you have these multi-billion dollar funds and big investors that have a tendency to just buy and hold over longer periods of time. Naturally, it's going to be less volatile. The participants investing in the BlackRock ETF, for example, are not like buying and selling intraday with leverage. They're buying and holding, and I think these vehicles grow, but again, my point is that it's going to be less volatile over time. So I think that gives you some like additional comfort versus, we had the Mt. Gox exchange hack. We've gone through FTX. We're still not necessarily regulated, but there's a hell of a lot more regulations and globally than there was before. And so, it's just maturing.
Yeah.
I'm going to hold that for a long time. That said, ETH, Solana, BitTensor is interesting to me. SUI, I don't know how to say some of these things, embarrassingly. SUI. I have some positions there, but again, it's mostly Bitcoin and ETH, and then with my ETH, I'm running some liquidity pools at times.
We need to get you back for the liquidity pools.
Yeah, happy to do a demo on that. That's cool. What about yourself? What what are you in right now?
I mean, similar to you, I have positions in the big guys, but then these strategy tokens are fascinating to me. Because Punk Strategy was the one Dan and I called on the show several weeks ago, and it mooned. I'm still buying the dip on that one. Just because I think, again, not financial advice, do your own research, but I think that as a first mover, punks always have that advantage. So as the first mover of the strategy token, Punk Strategy, I'm pretty bullish on that one for a longer period of time. But there's now strategy tokens for Bitcoin ordinals. Like,
Interesting. Okay, so this is kind of catching on.
Yeah, and like it's probably going to be a saturated strategy market, but hey, it's strategy season apparently.
Interesting.
And,
Okay, well, something to keep an eye on.
Yeah, so I think I've just been kind of keeping an eye on those, watching them, and still playing with Punk Strategy, and the volatility there, and there's lots of liquidity, so that's a fun trade if you can just catch it every day. And then we should also do another show on virtuals because there's a lot going on over there. Dan brought, what's it called? It's like Frog Ribbity Tibber, Tibbir. I had a good trade on that.
Okay, hell yeah.
One of them, an agent that took off. So
nice.
Yeah, there's still lots of stuff going on, and I don't even know if we would call that the trenches. That's kind of just Web3 crypto native.
Yeah, more
like
what you're
trenchy.
seeing and starting to participate in.
Yeah.
Okay. Cool.
Mm-hmm. Well, everybody, thank you so much for being here. Thank you, Ryan.
Thank you. Thanks for having me on.
First time on Beans.
Yeah, thank
Hopefully
you.
not the last.
Yeah, we shifted it up a little bit today, so I hope everyone enjoyed it. But thanks for letting me come on and talk through some of the option stuff.
Hell yeah, we need a third chair now so that
Yeah.
we can do, when Dan's back, we can all get on. And you mentioned having like an overhead cam or something.
Yeah, more camera angles. Yeah.
Oh man. Congrats to all of our winners. Watch your DMs on X or jump in our Discord and let us know that you won, and I will get all of those prizes facilitated. Likely not until next week because Dan and I have that multi-sig wallet, so it might take a little while. Otherwise, we'll see you next Friday. Dan will be back. We've got a big show planned. And yeah, have a great weekend, everybody. Thank you.